Are you an overseas buyer and wondering what your financing options are when it comes to purchasing your next London home? Well, this video is for you because I'm going to be having a dedicated conversation with a mortgage advisor that specializes in helping foreign buyers get the perfect financing to suit their needs. Hi everyone, Arinzeh here with Onyx Property Team and Keller Williams. I'm so excited to have this conversation with Ian Gray of Kinnison Finance. As many of you know, on my YouTube channel, I put out weekly videos about the London property market and living in this fabulous city. So I'm really excited to have Ian on as one of my first guests on the YouTube channel. But I think we're covering such an important topic because he is a mortgage advisor. He's been a great partner for me and my clients who, especially my foreign clients, who are looking for financing. So this episode is really dedicated to Ian being that property or that subject matter expert and being able to share and answer some questions that I often get from some of my clients, and just thought it'd be a good platform. So before we dive into my questions, Ian, I would love it if you would introduce yourself, tell us a little bit about your background, and also just Kinnison Finance.
Sure, thanks Ugo, and thanks for having me on. My name's Ian Gray, and I'm a partner at a mortgage brokerage here in London called Kinnison Limited, and we just deal in residential mortgage finance. We deal with lots of people from different countries around the world, or people who live here or not in the UK, as the case may be. Our business and myself also, we're made up of former private bankers. So we're all experienced in having worked in banks and dealing with high net worth clients. And those of us who started our business 5 years ago decided we'd like to focus on residential mortgage finance. And within that subset, I guess more of a focus on more complex situations. So people who might not live in this country, might have more complicated income streams, things like that. So I came here 20 years ago and didn't really plan to stay, but I'm still here.
And you're from Canada, right?
I'm Canadian by birth, yes.
Okay, great. So you also had that immigration journey as I have as well. So definitely we can bring some of that understanding. And I try to tell my clients I speak Americanese, so I can help them decipher that. So that's
true. And it is something I do enjoy doing because I went through the process of moving to the UK, buying a few pieces of property along the way, and learning how it works. And I do understand very much that the way of getting mortgages here is different from in the States or my home country. And as well, as you know, the property buying process is quite different too.
It is very different, and you've been such a great partner because oftentimes when clients approach me, they're super excited to get started to buy that home. But one of the first conversations is, what is your financing? And then it becomes, well, we don't know, or we want to look at financing. And you've been one of my first points of call to speak to them, help them understand that, and then ultimately find those financing options for them. So that's been super important that you understand that and can obviously relate. So let me dive into my first question, which is, are foreign buyers able to get financing to purchase a residential property here in the UK?
Yes, absolutely. Yeah. So it's a kind of a myth that you can't get a mortgage in the UK if you don't live here. Most of the banks that we would hear about, which in the UK we call high street lenders. I guess in the States you might say like a main street bank. Those people often won't lend to people unless they live here and have a very simple situation with a job and pay slips and whatnot. But there are banks, both retail banks, so we say the high street lenders who are a bit cheaper, and also more sophisticated or private banks who deal with higher end mortgages. And there are lots of options for people who don't live in the UK when they want to get the mortgage.
Right. And then again, that's why the conversation with you is so important, because you can help decipher through all that and find those, the right, kind of matching the right um, bank or finance option with the clients. So
Yeah, and just really, you just have to know who does it and who doesn't. And
after,
it's not something that you can kind of Google.
there's nothing worse than to really not be clear on you understanding the bank as well, because you then know, that they're actually going to be able to deliver. So that's really important. So what would you say is the overall state of lending or for foreign buyers right now? Is it, generally speaking, banks are still open and willing? I know when we first went into our first lockdown in March, pretty much the whole mortgage market kind of really shut off. So then banks had to kind of get comfortable again with exposure. So where would you kind of say things are right now, both for buy-to-lets as well as owner-occupiers?
So for the domestic buyer as well as the foreign buyer, the market is active, it's open. As you said, in the first lockdown, we sort of had a 2-month freeze, like a lot of places in the world. People didn't know what the world would look like after this, and banks were understandably cautious. That was probably more pronounced for foreign buyers,
Yeah.
because there are just fewer options for a foreign buyer than there are for a regular domestic borrower. But in the later spring and summer of 2020, things opened up again. Valuers could go out, estate agents could show properties, you could show your clients the properties again. So the banks then started to relax a little bit. And I think that there was a wider sense in the economy that we saw the London and the UK property market not crash.
Right.
So the prices held up, even when prices went up, depending on the type of property that you were looking at. So the banks then sort of relaxed a little bit and felt more comfortable lending. So we saw a bit of a pullback and then an opening up again. And we're back to what feels like a normal lending market now.
Okay, so you'll have good options. And I think before we started recording, you and I were talking a little bit, and you were mentioning owner occupier, so those looking for a second home versus the buy-to-let investor. What's kind of the difference in terms of either the pool of lenders or just overall, their ability to get the financing, and how do those rates kind of compare?
Mm-hmm. So with foreign buyers, it's either that you're buying it to have as a pied-à-terre or a base in the UK,
Mm-hmm.
Or you're buying it as a pure rental investment, what we say is a buy-to-let investment.
Right.
The options, if it's your own home, your own pad in London, for example, are more. So we have more banks willing to lend if you're going to be your owner-occupied mortgage. And this is, I think, because it's seen as less risky. So the person who's having to pay back the money is, it's the roof over their head in London or in the UK. So that is viewed in this country as a less risky proposition than if you're somebody who lives in a different country, has nothing to do with the UK otherwise, and also you're not really living in that property, so you're just having a tenant. So we see more options and a bit cheaper options if it's going to be your home here. Absolutely possible to get, investment property mortgages for foreign buyers, but I would say a little bit more expensive and a bit fewer options on the table.
Okay. And then with that, what particular challenges do American buyers face? Because again, we've run into this on a practical situation, but overall speaking, what are some of the challenges for American buyers?
So for American buyers, I would say that, well, the good thing about America is that it is seen around the world as a very stable country. The rule of law is similar, perceived similar as to how we enjoy that in the UK. So it's not considered a high risk jurisdiction. And there are countries where, you know, if you come from that country or if you made your money in that country, people really, it's very, very difficult to open an account with a bank in London. America, not so much. It's considered a safe, you know, a safe place to bring clients in from. So that's quite good. Now, whether a bank will open an account for you or not also depends on whether they are qualified with the IRS in the States to report back to them every year on the tax. So if you're a US taxpayer, then you can only deal with a bank who is what we say FATCA compliant. This is an acronym in the financial industry that means that the bank is accepted by the IRS to report back, let's say, returns on investments, interest on bank accounts, things like that. So with American buyers, if you're generally, rule of thumb, if you're looking to borrow under £1 million, then we are under £1 million sterling. We're looking at banks who probably will only do a mortgage. They won't look to expand that relationship with you. It'll be more of a transactional situation. Therefore, the reporting requirements are much easier. So more banks will lend to you. If you're looking to borrow over £1 million, or if your situation is such that we need to approach these more sophisticated private banks, then it's a different world, because those banks will all want you to invest money with them. Some will say you must invest with them. Others will say, well, we'd like you to, but you don't have to. But because you can, they have to be compliant with the IRS. And some European private banks are compliant, and onboarding an American is fine. Others aren't. They've chosen not to go down that route, and they've just chosen that the American market isn't for them. So again, it's for somebody like me to know, where are we going with this mortgage, and what sort of relationship do you want with that bank, if any, apart from getting the mortgage. And then we are able to narrow down those options.
Yeah, that's super helpful, because I've always kind of heard it, but I didn't really know what the issue was. But I knew that a lot of banks won't lend to Americans. But now you've broken it down. So it's kind of coming from the IRS side, needing to make sure that for any foreign lender that they are kind of approved on the IRS side. And then, but I guess some lenders might not choose to do that, or it's not worth their while if they're not getting ancillary business, or just really the relationship is financially worth it. So
that's right. Yeah, it's a commercial decision. I would say that a few years ago, it was much more difficult for Americans abroad to open an account with a bank in another country. But times have changed, and now the banks have evolved a little bit and have gotten more comfortable, because there's lots of business to be done with Americans in different countries.
Yeah, well, we definitely see a lot of Americans and foreign buyers in London. So I think up to 40% of prime central London is owned by foreign buyers. So obviously it's a market that banks want to tap into. Ironically, a lot of foreign buyers might buy via cash, so they don't need the financing. But for those that do, it's definitely good to know that there's options out there.
Yeah, and we do see lots of clients who don't need a mortgage, but they'd want one because the rates are very low right now.
Yeah, and I'm glad you segued into that, because that was kind of my next question. Overall speaking, where are rates? What would you say, I know generically speaking, might be the gap in terms of if the same person was a domestic buyer versus, say, an overseas buyer? What kind of rates or gap might they expect in terms of financing or interest rates?
Yeah, so that then depends on, again, going back to that thing of whether it's going to be owner occupied or a pure investment property. If it's owner occupied and your finances are relatively straightforward, you might be employed with a salary and bonuses. You might be self-employed, where your tax returns will tell the whole story of your income. Then we can often get quite good rates, almost the same as what a normal domestic buyer would be able to get here. So that's, rates fixed at about between 1.5% and 2% for 2 to 5 years. In the UK, we don't fund mortgages the same way. So we don't do 20 and 30-year fixed rates. They just don't happen. So we can usually fix out as long as 5, sometimes 10 years. But yes, the rates can be quite good. Now, a lot of clients will come to us with more complicated finances, and they may have money in trusts, or they might have some offshore vehicles which help them to mitigate tax issues, things like that. Now, if the situation is more complex, then we usually have trouble plugging into those cheap retail mortgage lenders. So then we have to maybe go for somebody who's a bit more niche, a private bank, and then you can be looking at rates a little bit more, sometimes 3.5% on the money. And then with buy-to-lets, investment properties, yes, it's a little bit more expensive. So I'm thinking around the 3.5% range. And then I would just say one last thing is, if you've got a really wealthy client and they're looking to borrow, millions of pounds, and they're somehow willing to engage on a different kind of relationship. Maybe they've got some investments, they would buy some funds from that bank or put some stocks on their platform. Then we can use that wider relationship potential to really negotiate quite good rates. So then you can look back at sort of the 1.5% to 2% for that kind of a larger loan where they're willing to do something else than just get a mortgage.
Okay. Obviously, a case by case basis, but it can vary. But the good thing is, again, obviously, interest rates are reflective of somebody's risk, perceived risk. But if it's fairly clean, straightforward, let's just say, are salaried or an executive in the U.S. buying a second home, that could be kind of the cleanest and best case scenario where your rates are quite comparable to a domestic buyer.
Yes, and it's absolutely my job to really root out the cheapest financing and for there to be a relationship that works for that client. So many clients just say, well, we just want a mortgage, that's all. We don't want to have to be expected to do other things with that bank over the years. Right. So we have to put the right people in the right banks for sure.
Right. And with that, what kind of loan to values can a buyer expect right now?
So that is actually one difference between foreign and domestic buyers. Foreign buyers, you normally need at least 25% down. Some are 35% down. But really, we would have trouble getting a mortgage for someone who doesn't live here now unless they had 25% of down payment on the price. And remember, the stamp duty tax on top of that in this country is significant. So about 25-35% down payment is usually what a foreign buyer needs at the minimum.
Okay, and was that the same for an owner-occupier as well as a buy-to-let, or buy-to-let tends to need even more equity or down payment to qualify?
No, it's about the same for both. I would say that with buy-to-let investment mortgages, that there is a sensitivity around the rental income. Mm-hmm. So although a lender might say, well, we need 25% down, there's another stress test put on what will that property rent for every month. And if that rent isn't as much as they would like for that level of lending, then it may be that they say, no, we will lower that mortgage. We'll need more down because we don't see that it's being covered by the rental income as much as we would like.
Yeah. Is there a back of envelope sense? So if, say, from my perspective, I know what that maximum rent might be, right? So let's just say £4,000 a month, which is 48 grand, or let's just say 50,000 per annum. Is there a multiple, generally speaking, in terms of what the banks will say, this is the cap on the loan amount?
There are formulas, and the thing is, the reason why it's so interesting for me is because they're all different. All the banks are different in how they look at it. Okay. So there is generally a formula which will say that the rental income has to provide a certain percentage cushion over the interest of the mortgage you're looking for at a higher stress tested rate. So as I said, we're really in record low interest rates. Mm-hmm. And a responsible mortgage lender is going to say, well, you might be able to afford this within your rent
Yeah,
now,
yeah,
but can you afford it if you had to pay 7% on your mortgage one day?
right.
And that's conceivable, I suppose. It's been a long time since we've paid 7% on mortgages, but it could be. So we need to do an analysis like this. And in London, as you know, Ugo, the rental yields are a little bit lower than the rest of the country because of the prices having been quite high over the years. So we do see that as being more of an issue in
Training
central.
factor, yeah.
Yes, because the rental yields tend to be around 3, maybe 4% if you go a little bit out of zone 1. But we can also look at a client's overall situation. So if you're somebody who earns well, you don't have a lot of debt back home in the States, and you have a lot of spare income, then I can sometimes convince the banks to go to 75%. Because I can show that you could afford to pay that even if rates went up and your rent didn't go up.
Right, right. And with that, I would just want to highlight again one of the things you mentioned, which again, I think for certainly as an American, that blew my mind is that, I've got multiple properties in America. They all have 30-year fixed mortgages. We just don't have that option here. I think it's a function of there is no Fannie Mae, Freddie Mac to offload the bank's assets, so the banks get the loan, put it on their books, and sell it off and securitize it. The UK doesn't have that system, right? So banks, when they underwrite debt, it stays on their balance sheet. So I guess that's where they're not really willing to offer these fixed rates for such a long period of time. Is that right?
That's exactly right. Yeah, it's quite complex, and I would even say probably beyond my understanding. But it's the way that the banks are funding those mortgages based on long-term, bond issues and things like that. It's just.
But someone is, taking on a 2-year fix that just feels so risky. I recognize that it's such a low interest rate environment. What would you say to that person? I mean, or is it, well, let's just presume, rates go up 100 basis points or 1% or something, like how it's, because I have a really hard time being willing to accept that little level of certainty as to the rate I'm getting right now. Does it go from 3% to 6% if in the course of 2 years the world just completely shifts?
Yes, well, it is a good question, and the answer to that is, first, even if we could do a fixed rate for 5 or 10 years, that may be something we want to look at more closely for those who want that interest rate hedge and don't want to have to worry about rates going up for a long time. However, the regulatory environment that we're in, and it should be this way, is that you can't really get a mortgage unless you can afford those interest rate rises. So you need to be able to absorb the rate going to even 7 or 8%. And if that's the case and the client can afford it, then we're usually okay to get that mortgage. If they can't, then there'll be a hard time getting the mortgage. Sometimes when it's a investment play, then people will say, well, if the rate went up by that much, I'd probably sell the property or pay it off with other money.
Yeah.
So we do have to look at what's your fallback position? What would you do if rates went up? Because as you said rightly, we just can't fix the rate for the whole mortgage term.
I hope this video has been helpful so far. We've had so much to cover and such good information, but we've actually had to break up the conversation and make it a 2-part video. So you've seen part 1, but make sure to check out part 2 where we carry on our conversation, dive into more details you're going to need as a buy-to-let investor, and make sure we get Ian to cover everything you're going to need to know. So check out part 2 as well. See you soon. Thanks so much for watching. Make sure to check out the other videos on my YouTube channel where I share great things about the London property market and living in this incredible city. So that's Ugo Arinzeh with Onyx Property Team and Keller Williams. Bye for now.